Get ready for the big revival. The real estate revival, that is. Now on 77 WABC, your New York weekend.
Get ready for the big revival.
It's Rand on Real Estate. Look out! With Greg Rand.
Welcome to the Big Real Estate Revival. My name is Greg Rand. You're listening to Rand on Real Estate on 77 WABC and WABCRadio.com. And we're going to talk today about self-reliance in a world gone mad. A lot of crazy things happening out there in the economic and business landscape, and we're going to try to apply them to what we see is coming and the opportunities that we think are out there for people just like you to make a fortune in the next real estate revival, which is coming. I don't know when, but I know that it is, and we can talk about what that's going to look like. I'm joined by Laura Smith, my co-host. How are you?
Always good to be with you, Greg. Thanks.
It's good to see you. And so this has been a big week in real estate. It's been a big week in the economy. We have a major election coming up, and so people are starting to posture left and right, trying to figure out who's going to get the higher ground. I have my theories on who's going to, but I think I share the same theory as almost everybody else out there. But something very interesting happened this week, and that is the president had his economic advisors come together and talk about what they can do about the economy to get things off the ground again. And I watched it. It was a little painful. It was about 40 people around a big square table. You could picture it with a bunch of aides sitting in the backgrounds. And these are his economic advisors, the smartest people on the economy that he could find across the whole country. And it was pretty good. So he made an introduction, and they went around the horn talking about different things. And I'll tell you, Laura, more than half of the people just spent the whole time bowing and scraping and congratulating the president on what a fabulous job he's done, saying things like, "Oh, Mr. President, before I get into my comments, I just want to tell you what a fantastic job you've done, and I want to commend you on the efforts that you've made," and blah, 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 gush, gush, gush. Not a lot of substance there, but every once in a while you'd catch somebody who had some interesting advice, and they all seemed to center on the same thing, and that was the lack of confidence that's in the economy right now. That it's tied to a lack of I don't want to say stability, but it's confidence and a lack of being sure what's going to happen next. The tax cut came up a lot. The idea that the Bush tax cuts are going to be expiring in January, and Congress took off out of town without doing anything about it. But the interesting point was this idea that confidence drives the recovery. Macroeconomics might drive the bust, but what drives the recovery is everyday consumer economics, the way that people feel about what's happening and where it's going, and their willingness to come out of pocket, spend money, the willingness of businesses, especially small businesses, to come out of pocket and hire people and expand. And that issue of confidence is so interesting because it's totally emotional, it's totally psychological, and it's totally self-inflicted, what we have right now. I talk a lot on this show. I have a segment that Laura loves called Smart People Saying Dopey Things About Real Estate, and it generally is tied to this idea that to get ahead in government today, it seems, or to get ahead in media today, you have to just trash the economy. You have to use the most trumped-up terms that you can. For example, nothing ever declines anymore. Things only plummet. They don't go down, they collapse. I've seen stories, and so have you, about, retail sales collapsing 2%. Like, what collapses 2%? Well, that's the way they talk these days. So the self-inflicted wound, where we stand right now, it was interesting because the president's advisors said we have to do things to improve confidence, and some of the very same people are on record as having trashed confidence over the last several years. If you wind the clock back to just about 2 years ago, we had an election that was happening a couple of months or a month after that, and there were a lot of people that wanted to make absolutely certain that a certain political party got kicked out and a certain political party got brought in. And the way they did that was they drove the economy as hard as they could. Now, granted, there were real legitimate things under the surface that were driving the economy bad, those economic factors. But to piggyback on the economic factors, a lot of people did a lot of things to try to drive consumer confidence into a pit to make sure that somebody else got the reins to control the country going forward. And what it reminds me of is, Laura, you know that I'm writing a book, and it's coming out in the spring. It's called Crash Boom, and it's about the inevitability of both. Mm-hmm. All right? After every boom so far in modern history, there has been a crash. The bigger the party, the harder the hangover. And after every crash, eventually has been another boom. sometimes more gradual, sometimes more volatile, but it is a cycle, and people seem to know that. In fact, they'll say that. If you ask the average person, is the economy go through a cycle? They say yes, and they're always surprised when it changes one way or the other. So I've done an enormous amount of research to try to understand what happened last time. Meaning, you've heard the comparisons. This is the greatest economic crisis since the Great Depression, right? Nothing's happened in modern history like this except for the Great Depression. So I've gone back and I've done research for the book, and I found there are enormous parallels, uncanny parallels between what happened last time and what is happening this time. And it seems that in both cases, there are those two drivers that drive the economy either on the way up or the way down. One of them being macroeconomics, the real supply and demand and currency and the dollar and all this other stuff that I didn't learn in college. And then there's the emotional economics, the consumer, the Main Street, the attitudes of people. So let me bring you back to what I learned that happened back then that was so interesting. Great Depression kicked off in 1929 with Black Tuesday when the stock market crashed, and a lot of people refer to it the way that I just did, that it kicked off. But the historians that recount this pretty much agree that was not the start of the Great Depression. That was the first outward sign of the Great Depression. It was the first sign. Where it really started was World War I ended in 1918. Okay, and so what you'd expect, people coming back from a war, an optimism, a swell of optimism in America and in lots of other countries that the war was over, and people came back feeling pretty good. And so you've heard about the Roaring '20s, right? You've seen images of people doing the Charleston and a lot of partying, so much partying they made liquor illegal. They must have been drinking a lot back then must have been a lot of problems, a lot of people doing things that they shouldn't be doing. So things were roaring in the Roaring '20s, and everybody was feeling good. There was an unprecedented level of investment in the stock market by amateurs. There was an unprecedented level of speculation in real estate by amateurs. All right. In both cases, people trading on margin, meaning borrowing money from the brokerage house to buy stocks with and trying to make a profit and then pay the stock brokerage back what you borrowed. Or in the case of real estate, finding a piece of property and putting a no money down deal on it. So basically buying with all mortgage, or back then they called them options. You'd put a little money down and be able to control a piece of property and try to find the next buyer to pay you a better price than you paid just a few weeks ago. So that was what was going on. There was an attitude that took hold that prosperity was the new reality. And in fact, there were business leaders and politicians and prominent writers of the time who said things like, we have conquered poverty once and for all in America. Overarching statements of absolute, this is the new reality. There was articles written, things like, every man should be wealthy. That type of mentality took hold. But lurking under the surface was an ugly, dangerous macroeconomic situation that was tied to World War I, which was that during World War I, the biggest industry in America at that time was the agricultural industry. All right, they grew all the grain and all the wheat and all the basic food products for our country, and then during World War I, they grew a majority of the food to support the war effort in Europe. And so when the war effort ended, everybody was happy except for the agricultural industry, who saw something like 25% of their demand just evaporated. So there's not that many businesses or industries that can support a 25% reduction in their output on a dime. And the agricultural industry was no different. So the number one employer in America all of a sudden saw a massive decline in the demand for their product. And so there was going to be unemployment, right? That's what's going to happen. They're going to have to do layoffs. They're going to have to close farms. They have to change their production capacity to match up with the demand. Except that there were some really smart people in Washington who decided they had a solution. And I call these the 1 degree solution. Like they run into a problem and they turn themselves 1 degree and think they found the brilliant solution to the problem. And so they said, so we're producing too much wheat and grain that no one's going to eat, but if we fire the people that make that surplus, we're going to wind up having high unemployment. We don't want high unemployment, so I know, let's just keep making the grain and the wheat, keep paying the people, and we'll just stockpile all the food. Let it rot in the warehouses, doesn't make a difference, as long as we can keep people at work. This sounds kind of familiar to today, I'm sure. So as the decade rolled on, the Roaring '20s, eventually the government realized that they were destabilizing the price of commodity products like wheat and grain, and it was having a negative impact overall on the overall economic picture. And so they finally decided, we can't keep doing this. We have so much surplus grain, it's rotting in the warehouses. Let's just stop this. And the layoffs eventually happened. They happened right at the end of the 1920s, right at the same time when people started saying, hey, wait a minute, these stock prices are crazy. Joe Kennedy, John F. Kennedy's father, was a famous stock speculator of the day, and he has a famous statement where he knew that something was awry when he was getting his shoe shined in his office building in Manhattan, and the shoe shine boy was giving him stock tips. He said, if the shoe shine guy is giving me stock tips, something's not right. So long story short, you had a raging consumer optimism driving the economy forward, but you had an undermining happening by some very real factors having to do with the end of a war, but some very bad decisions in Washington trying to prop up a sector of the economy that could not handle it. And when things crashed, they crashed hard. Everything came together. And people will tell you that from 1929, when it actually began, all the way through World War II, which is 10 years later, what drove the economy deeper and deeper and deeper from that point forward were not macroeconomic factors. It was consumer confidence factors that drove it. It made businesses fail. It made banks fail. People running out of the bank, taking their money out, runs on the bank, so forth. It made businesses go out of business because nobody was buying their stuff. But it was the mentality of the people that they were sure that the other shoe was yet to drop, and they were sure that it was going to get much, much worse before it got better. So then when I see in this modern era right now, the president's advisors saying we have to do something to improve confidence, it reminds me of just the last couple of years when every one of these advisors, I shouldn't say every one of them, so many of these advisors, so many of these politicians, so many people in the business community have used these catastrophic terms to describe where the economy was going, and now they want us to all snap out of it. They want it to all just get better on a dime. Like, okay, now we have to turn things around. So all you people out there, start spending your money. It's Christmas season coming. Start spending your money, because if you don't start spending your money, we can't turn this thing around. There's no levers in Washington that are going to allow us to make this better unless you do your part. So I thought I'd share with you a couple of... You want to say something?
Well, I find it interesting that at the time that you said that the crash was happening, there was this surge in confidence. Was it the government that was trying to make the people feel that way, or did they just have this false sense of what was going on because they really didn't see what was happening? I mean, they didn't have, obviously, the internet and everything else, and to get a picture of what was really going on. Was that it, or were they being told that things were okay despite the fact that they weren't back then?
I think it was the first thing you said. My research for the book was reading everything I could find on it to get the actual historical record, but then talking to people in their 90s who lived through it. And what I've gotten is that we can look back a couple of years and see what it was like when everybody believed that their house is going to be worth more next year. Everyone believed it was easy to make money in the stock market. Everyone believed their job was secure. Everyone believed they could buy the plasma TV on a credit card because they were going to have no problem paying it off. It's kind of the same thing, all right? We had people in government telling us 5 years ago that things were great, but that I don't think was what was driving us. It was just the fact that things were great. You looked around, you tried to buy a plasma TV, but they were sold out because everybody was ahead of you at the store picking it up. Everybody was smiling, everybody was happy, and there was this sense that there's strength in numbers if we all believe that it's true. And the bottom line is that does last for a while. It lasted in the Roaring 20s, it lasted in the Roaring 2000s. In both cases, it was about a decade that the self-fulfilling prophecy kept driving people's confidence to spend and spend and spend and spend, and then it hit the wall. So I think people back then didn't buy what politicians told them either. But it's the herd mentality.
But what if... So you're saying now that the government shouldn't be so doomsday and be a little bit, instill some more confidence, right? But at this point, then, wouldn't we be doing exactly the same thing? Because now it really is a reality that things are rough. I think a year ago when we were in that terrible place and it was so volatile, I think it would have been good then, but it seems like now it would just be putting a Band-Aid over something, because now it's not. In fact, on the point of the television sets, so I heard a report the other day, a consumer report, saying that this Christmas they're going to be selling those same TVs that we were paying for $2,500 a couple of years ago, those big LCD things. Right. They're going to be going on sale for anywhere between $250 and $150 this season.
Okay.
Because they can't get rid of them. They have a surplus, no one's buying them. And so anyway.
So it's time to put the NFL wall up in the basement?
I guess you
put
can.
the 6 TVs?
Yeah.
But you make a very good point. My sense is that on the way up, When things are going well, we don't have to be told. But when we get told things are going bad, it sinks in. I'm not saying that they can do anything right now. Government can't say a word that's going to persuade anybody. Their policies right now are probably making things worse because they are leaving things unstable. They're not confirming tax cuts are going to continue or not continue. They're increasing deficits and spending, and they're scaring a lot of people.